Apple Pencil, in case you cannot see here. Okay, so let me go back to my screen so that you can see the topic. GST registration in Singapore, the when and the why. Okay, so what we want to do in this presentation, here are the learning outcomes. So one, we would love to talk about the criteria for compulsory GST registration. Good news, it is much simpler than the time when I first learned and practiced GST. And then we talk about voluntary GST registration. What are the benefits of doing so? But with benefits, it also comes with responsibility. So we are going to talk about what are the responsibilities if a person decides to go for voluntary GST registration. Number 3, common scenarios requiring GST registrations. Something to take note of. I am, as usual in other presentations I'm doing, I'm going to illustrate with real-world case study. Not the real-world case study per se. I will want to put the case studies in this presentation to make the discussion more practical and more relevant should you decide to practice GST when you come out. And then summarize the key steps and the considerations in GST registration process. Okay, so these are the learning outcomes. And what we are going to cover in these presentations are as follows. Overview of GST registration in Singapore. There are 2 types of registration for GST purposes. On one hand, compulsory, or you can call it mandatory. The other part of the equation is the voluntary GST registration. Like I said, the benefits and responsibility for GST registration, in particular, the voluntary GST registration. Okay, and common scenarios that require GST registration, the process itself, which basically I'm not going to describe a lot, simply because you can follow through from IRA's e-test guide as well as your materials. The discussion will be utilizing case studies approach, so that as soon as we touch on the main point, we will use a case study to help us retain, recap, and to understand a bit more of what is being discussed. Okay, then I'll wrap up the whole presentation with a summary of the key lessons. Okay, so without further ado, let's talk about GST registration. So the first thing I would love to talk about is the overview of the GST registration process. Now, first of all, is that simple? Well, Singapore GST registration is pretty straightforward because goods and services tax in Singapore has been in place for 30 years at the time of the recording. And I thought a lot of people should be familiar with the GST registration process. In fact, a lot of my clients are already GST registered. So the question is, why do we even talk about this? Now, the targeted audiences for this topic particularly would be those who have a new business. Okay, so you may have an existing company who has already been GST registered. And for some reasons, the company would love to expand the business, and it's not expand the business within the same entity. It is to expand the business through the incorporation or setting up of a new entity. So that is why GST registration is required. There are small businesses who are not registered for GST, but when the business continue to expand, here comes the point that they have to register for GST on a compulsory basis. The second components. The third one would be something you need to bear in mind. Although in your materials, you might be talking about companies, in GST, for GST purposes, we do not use company, we use persons. So persons could well be individuals, could well be companies. So you might be wondering, well, I'm a sole proprietor, do I have to register for GST? Well, the answer is maybe, because if you are doing well, congratulations. And if you are doing well, and in terms of the revenue, when you hit the threshold, guess what? You have to register for GST. regardless of whether, oh, but you know, I'm not a company, so why do I register? Well, GST in Singapore applies to persons, okay, not companies only. So you have to understand that. So the current GST rate is 9% at the time of the recording. Of course, you may be everyone is speculating whether there will be further increase in GST rates. So this is not the purpose of this presentation. So what I'm saying is that, well, my own guess, in the next 5 to 6 years, there shouldn't be, or I didn't anticipate any increase in GST rate. But in the midterm, I see the need of doing that. I mean, I'm happy to talk about it at another time, but for the purpose of this presentation, let's just focus on what is important. Okay, so what is the importance and the objective of GST? Well, if you take a look of the annual report issued by the Inland Revenue Authority of Singapore on a yearly basis, GST actually, if you talk about the total revenue collection, total tax revenue collection, GST actually is around 21% of the total revenue collected by IRAS. It is quite decent size. In fact, in the last few years, when I say few years, I could mean 5, 6 years, GST revenue contributes about 21% to 23% of the total revenue collected by IRAS. So in terms of revenue collection, it is quite a significant component. And most importantly, you think about it, unless you do not eat, you don't drink, you don't consume, you have to pay GST, regardless of how wealthy you are or whether you belong to the low income group. Everybody has to contribute their fair share of the GST revenue. To a certain extent, some people argue it might be fairer compared to the income tax system. Well, I'm not going to get there because obviously when someone says it's fair, there will always be other people who say it's not fair. Okay, just think about the the objective of GST is a mechanism to allow the government to raise revenue. Okay, so in terms of the overview of GST registration, to summarize once again, there are 2 types of GST registration in Singapore. One is the compulsory type. The other one is the voluntary. I mean, that's all. Now, this discussion will be extended to beyond the normal rules because we are under reverse charge mechanism since 1st of January 2020. Okay, and we are currently having overseas vendor registration regime, OVR. Okay, what it means is that to a person who is importing services to Singapore, even though the person right now is not registered for GST, the RC requirement may kick in to make the person from a non-GST registered person to a GST registered person. So just take note. GST registration does not apply in a normal case. If I'm importing services into Singapore and the value of the import of services exceeds $1 million, okay, I might be required to register for GST under the RC reverse charge mechanism. And for OVR, well, foreign service provider might be required to register for Singapore GST when certain requirements are met. Okay, so this registration system is no longer just applied to the normal cases, which you and I can understand. It is way more than that. Okay, so let's look at a case study here. A case study about this company called Sunshine Electronics. So at any point in time, when I finish mentioning a couple of points on my presentation, I'll give you a case study just to reiterate the concepts that we have discussed. Okay, so let's take a look at this case. Sunshine Electronics is a local electronic goods retailer, operates without GST registration since its turnover hasn't crossed the threshold. And what is the threshold? Well, anyone knows? Yeah, it is 1 million. It's the annual value of taxable supplies. Okay, annual value of taxable supplies exceeding $1 million Sing dollars and then the person will have to register for GST under a compulsory basis. Okay, the management is considering expanding its product line. As I said, well, the business is not yet registered for GST, but the management is thinking of expanding the product line, so which means that you can expect the business will increase its revenue. So what we are asked to look at is the basic concept of GST, why is that important, and provide Sunshine Electronics an overview of the GST registration. So let's take a look at what it is. Well, what is GST actually? Well, GST is a consumption tax. It's a consumption tax imposed on local consumption of goods and services, plus import of goods into Singapore. Okay, so this is the basic definition of GST. The importance of GST, obviously, like I said in the previous slide, it is to provide decent size of revenue collection for Singapore so that the government has money to spend on public programs, infrastructure project for the next generation, as you can tell. So GST registration here, so far, the business is not GST registered. So when would the business need to register for GST under compulsory scheme? So then we have to talk about what is a compulsory GST registration under the two bases which I'm going to talk about in the next few slides of this presentation. So the first one, compulsory, you can talk about retrospective, compulsory, retro, and then you can talk about prospective, compulsory GST registration. Okay, so it is important for a non-GST registered business to be aware of the compulsory basis. And then some people might even say, well, even though I'm not expanding my business, do I want to register for GST? So that's where the voluntary GST registration comes into consideration. Okay, so these are all the points that allow us to continue to build on when we continue a discussion of the GST. So let's talk about compulsory GST registration for the time being. Okay, what is compulsory? Now, sometimes I may use compulsory, sometimes I may use mandatory. They mean the same thing, so it doesn't matter which word I use. Basically, it says that a person is required to register for GST. So that is all it means. Now, under the GST Act, so before we even talk about GST registration, if you take a look of the materials you have, I want to draw attention to the concept of taxable person. Now, this is very important for us to know why GST registration is important. It's because taxable person is defined under Section 8(2) of the GST Act as a person who has already registered for GST and a person who is required to register, but hasn't registered. So I'm now talking about this second group of people. People who are not yet registered, but they are required to. So what does it mean? It means that they failed to register for GST. So the implication of this situation is that the person, obviously, one, does not have an input or an output tax account in its balance sheet. So when it makes taxable purchases, okay, which means that the purchases come with the input GST. So logically, the input tax on the purchases will also be recorded or reflected in the profit and loss account. And what happens is that if the business is not careful enough, the input tax might have been claimed as an income tax deduction. So then it is in breach of the Income Tax Act requirement, because if a person is not registered but is required to, it is not allowed to claim any income tax deduction on the input tax component. So this registration is a big deal because it can extend, the implication can be extended to the non-compliance with Income Tax Act. So just keep that in mind. Okay, so another thing to take note of is what is the prospective and retrospective basis of GST registration. Well, obviously, for one, retrospective, as you may know, is looking backwards. So since let me just figure out correctly, is 1st of Jan 2019, if I'm not wrong. The way to look at retrospective is simpler because it falls under calendar year basis. And what is calendar year basis mean is that, well, let's look at fast forward to 31 December 2024. Okay, maybe I should use 2023 because it signals that it has happened. Now, it might be too late to see this now. Okay, just let me explain what I mean by that. So what I do is I look at my business, the value of the taxable supply on this date, and then I see whether the value exceeds $1 million. So if my business revenue, the threshold is exceeded. Okay, let's just use the phrase, the threshold is exceeded. What it means is that I have to file F1 with IRAS by 30th of Jan 2024. By 30th of Jan 2024. Because it's 30 days from the end of the financial year. And the GST registration, once approved, will be effective on 1st of March 2024. So now registration and effective date are very straightforward. 30th of Jan, 1st of March of the following year. So why am I saying it's late if I only discover it now? By the time of recording, it is already after 30th of Jan 2024. And if I only know now that I have to register for GST, is not looking good, because then I'm late in filing my GST registration, which means for one, I am suffering penalty. For two, the effective date of GST registration would have been 1st of March 2024, and again at the time of this recording, I'm already, 1st of March 2024 is over. So what IRAS would do is to bring the situation of the business back from 1st of March 2024, which means that, let's suppose today's date is, at the time of this recording is 29th of April 2024, it's not so bad. But let's suppose we talk about 29th of December 2024, which is Q4 of 2024 right now. And then what IRAS will do is that since the effective date of GST registration is 1st of March 2024, based on this discussion, output tax to be charged by the business will have to happen from 1st of March 2024. So it means that between 1st of March 2024 and today's date, 29th of December 2024, any output tax that hasn't been charged by the business, okay, will be required to be charged. Of course, the business didn't charge output tax to anyone. So how do you actually charge the GST output tax to anyone which is no longer where the transaction is already over? Which means the business itself will have to suffer cash flow outlay because it hasn't charged the 9%. So in short, the business had to cough out all the requisite amount of the output tax and remit it to the control of GST plus the penalty. So how many of you see that is a big deal? Okay, so it's not like, oh, because I'm late, I'll only account for my output tax from the time I notify IRAS. No, it will be dated back to the first day the effective date of GST registration plus the penalty. So that's retrospective basis. So sometimes when a client tells me, oh, they are late in GST filing, I will have to say, is that still within Jan of the next year, or is it over? Because if it's still within Jan, well, as long as it's before 30th of Jan, there's still something that can be done. Okay, one of my clients many years ago came to me on 16th of Jan 16th of Jan in the calendar of the following year. And she said, as a property agent, her commission of the previous year exceeded 1 million. not the sales of the property, because she's a property agent, so she earns commission. And the fact is that her commission, the amount of commission she earned exceeded $1 million. So luckily she came to me on 16th of Jan, not after that, not after Jan. So I told her quickly to get GST registration, and then she has to start charging GST 8-9%, depends on which year we are talking about, to her client. Okay, so again, this is why knowing the GST registration issue is important. Okay, so how about prospective? So let me clean this up first so that we can talk about the prospective GST basis or registration basis. Okay, so prospective is a bit different because a prospective basis is a forward-looking basis. It means that I have to ascertain today, let's suppose today's day is 29 April 2024, which is the day when I'm recording this presentation. So what the prospective basis, as you can tell from the materials, it means that I am looking at within the next 30 days, whether the threshold of 1 million is met. So that's what we call forward-looking. So again, for retrospective basis, it is being evaluated once a year, at the end of the calendar year, so to speak. But for prospective basis, you think about it, it is being evaluated on a daily basis. The question every day you have to ask is, within the next 30 days, will I hit the threshold? Will I exceed the threshold? This is still being evaluated on a daily basis. But of course, when we say within the next 30 days, the 1 million threshold is exceeded, IRAS has a particular flavor, if you like. They said that while I do not take your verbal representation, I want to see documentations. I want to see whether you have signed any contracts. I want to see whether there is a purchase order in black and white, because I do not take your verbal representation as you have to register for GST. Now, this is my understanding. I don't mean that it is really reflection of IRA's standpoint. It is my understanding. Someone taught me many years ago. IRA's mindset is that they don't like you not knowing enough of GST rules and regulations to come under the GST administration. And it was my understanding. So personal opinion only, okay? So treat it as personal opinion from Jack. And what happened is that, hey, I don't want you to come to GST registration unless you are pretty sure you know what you are doing. That is the mindset of IRAS when it comes to GST registration. So that's why they want you to give them the documentations, black and white, so that they confirm, okay, you know why you're coming to the GST registration regime. Okay, so that's what he says. Now, the one thing that you have to be very careful is that once you have determined the threshold is exceeded, okay, I have clients, I can share a story of this, I can share many stories of this, but just take note for this presentation purposes. If a business exceeded $1 million, the threshold, it can't actually, let me put it this way, it can't keep it in silent. It has to notify the control of GST. So whether you want to register for GST or not is no longer an option because the threshold is already exceeded. And it's your obligation to inform control of GST of the GST registration, or you may have reasons to ask the control of GST not to register you. Now, in the general regulation and the e-tax guide, there's an e-tax guide on this. The control of income tax, the control of GST actually spells out certain examples whereby you hit $1 million threshold, yet for those reasons stipulated in the e-tax guide, you are allowed not to be registered. Okay, so you may want to take a look of those specific examples. Again, we always said that these examples are not exhaustive. You may have your own justification, but no matter what, you cannot keep it in silence. You cannot keep it in silence in the sense that, oh, you think that hitting a $1 million threshold is by luck. It will not happen again. Now, once you hit a million threshold, you've got to inform the control of GST. Okay, so this is very important. And then let's talk about the deadlines and the penalties for non-compliant. As you know, the deadline is 30 days, so it's very, very straightforward now. So the magic day again for the retrospective basis is the following year's 30th of Jan. The effective date of GST registration is the following year's 1st of March. And then for prospective basis is within 30 days from the date of the forecast, which you can submit the proof in black and white. Okay, so this is what you need to know. And of course, failure to register for GST will comes with fines and penalties. I'm not going to repeat myself because you can refer to IRA's website, you can refer to your materials for some references. Okay, so exceptions or special cases. So what is exception and special cases? Like I said, if you already exceed a $1 million threshold, you cannot cannot keep quiet. You do have to let IRAS know. Okay, either you register for GST or you apply for what we call exception. It's not exemption, it's exceptions to GST registration. So again, based on the stipulated examples given by IRAS, or you may have a very solid example to justify, you may be accepted, you may fall under exception to the general rule. It is possible not to get GST registration, so to speak. At the same time, there are cases where depends on the nature of your taxable turnover. If your taxable turnover substantially falls under zero rated supply, which is GST at 0%, you may apply for F2. F2 is the GST exemption, GST registration exemption. It means that even though your revenue, your taxable turnover exceeded $1 million, you are exempted from GST registration. Of course, that comes with certain responsibilities plus drawback if you decide to go for F2 exemption. Okay, so just take note of that. All right, so the next thing I would like to talk about, okay, let's talk about case study here, tech innovators. Okay, so this is a software developing company has quickly gained large contracts and expect its turnover to exceed $1 million in the coming months. So number one, is that retrospective or is that prospective? Right? It is going to exceed, not yet. So it is a GST registration under prospective basis. Okay, so number one is prospective. It's pretty easy to see because it's looking forward or forward-looking. Now, the next thing is once you decide it is prospective, then when is the deadline for filing the GST registration? Okay, it's 30 days, right? 30 days from the date of forecast. Now the question is that there's a large contract or large contracts. So how do I know that this is real? Well, of course, I need to have the black and white contracts in case IRAS asks, hey, how do you decide that you are required to register? Well, I've got a contract where the revenue from the contract is over $1 million. Okay, so with that, then you say you file your GST F1 within 30 days from the date of the forecast. And then you have what will then you then will be registered under GST, and from that point onwards, from the effective date of the GST registration, you will then be required to account for 9% or 0%, depends on whether the standard rate is applied or zero rate is applied on your from your business. Okay, so of course, if for some reason failure to register or failure to account for output tax would result in penalties stipulated in the GST Act. Okay, so I'll leave it to you to read the materials, but it's clearly a case of a prospective GST registration. Okay, it's a prospective basis under compulsory GST registration regime. All right. So then after this, we move on to the voluntary GST registration. Okay, so voluntary.